Previously, we started with our discussion in something called variance analysis, and we saw the different variance analysis within the organization or web company. We analyzed according to level 1, level 2, and level 3, and here is the summarization of what we performed according to web company. Of course, we started with level 1 by comparing a static budget with actual results. And we said that this difference could be caused by two reasons. The first, the difference between the actual level or output level and the budgeted output level. And the second reason could be the difference between the selling prices and let us say costs. Of course, the difference between the budgeted and actual selling prices and costs. And according to our level 2 analysis, we divided this static budget variance onto these two reasons. The first being the sales volume reason or the sales volume variance, and the second is called the flexible budget variance. And then we saw also that the sales volume variance and the flexible budget variance could also be divided onto different classifications. For instance, we said that the sales volume variance by the amount of $64,000, unfavorable of course, could be divided or could be caused by two different reasons. The first is the change between or the difference between the actual and the budgeted market size, and the second reason could be the difference between the actual and budgeted market share. And of course, we performed this analysis in our level 3 analysis. Also, we said that the flexible budget variance could be, of course, according to the different classifications within the flexible budget variance. Of course, as we saw in our analysis, that the flexible budget variance could be because of the selling price or the changes between the budgeted and actual selling price. Could be between the difference between the budgeted and actual expenses, whether it is variable or fixed, which is the same summarization as we can see here from this slide. And also, according to our analysis or level 3 analysis of the flexible budget variances, we said that the flexible budget variance could be caused by also two reasons. The first reason could be the change in the price itself, or the second reason could be the change or the difference in the quantity. Therefore, our direct materials variance and the direct manufacturing labor variance could be classified onto two different variances or two different classifications. The first is the price variance or the rate variance for the direct manufacturing labor, and the second is the efficiency variance. And as we can see here, this was the last level of our analysis. And as we can see that from level 1, or as we move up the levels from level 1 to level 3, we are dividing or digging deeper into the causes of these variances. Therefore, the amount of details is getting more and more as we go up the levels. Any questions? Of course, this is what we took in the last 3 to 4 lectures. Now, let us consider what are or what may be the causes of the different variances, the different price variances, and the different efficiency variances for the direct materials and the direct manufacturing labor. As we can see here from our summarization, that we had a direct materials price variance by the amount of $44,000, or of course favorable price variance for the direct materials by the amount of $44,400. So what may be the causes of this variance? What do you think the reasons that cause this variance? The change in price. Why the price is changed here?
Maybe the direct materials depend on the season of the year. Or maybe this year there is more raw material of that direct material.
Therefore, one of the reasons that could be, or that caused, or that affected the price of the direct materials could be that there is a general increase in prices in the market, for instance. If there is a general increase in the prices, therefore every price of every product within a market or within a specific market or within the economy or the whole economy could risen up. Therefore, the price here, of course, we have a favorable price. We have a favorable price variance. That means that the actual price was less than the budgeted price. Of course, the one reason of the reasons is that the prices within the market has decreased, or we had a general decrease in the prices within the market. This is one cause of the causes. What else?
The demand for the raw materials has decreased or increased.
Excellent. The demand of the raw materials has decreased. Therefore, suppliers are decreasing their prices in order to sell what they have expected to sell, for instance. In order not, or for instance, another reason could be is that the market is saturated with these direct materials, for instance. Therefore, if a market is saturated with a specific product and so on, the prices would decrease eventually. Therefore, this is another reason. Another reason is that the purchasing manager was able to negotiate successfully a decrease in the prices. Therefore, the efficiency or the successfulness of the negotiations between the purchasing or our purchasing manager and suppliers had an effect in decreasing the prices of our direct materials. What else?
Maybe we reach to a level where a range where raw materials are list price with this range.
Excellent. You mean the economies of scale. Excellent. Maybe the purchasing manager ordered a large quantity of materials or direct materials in order to decrease the price, for instance. What else? What may be or may be the reasons of this price difference or price variance, favorable variance, of course. Another, or let us say the last effect or the last reason of this price variance is that maybe we switched from a high quality direct material or a high quality raw material onto a lower quality raw material, for instance. The purchasing manager was too focused in order to decrease the price that he accepted a lower quality or purchased a lower quality direct materials or raw materials. Or maybe, for instance, we switched from one supplier to another. Therefore, to another supplier that had a lower price.
Maybe there were a monopoly of specific kind of raw material and then there were more suppliers.
Excellent. Therefore, the monopoly was broken down, and therefore this market changed or transformed from a high monopoly, let us say, market to a high competitive market, or let us say to a competitive market. Excellent. Therefore, as we can see, we can have a lot of reasons, we can have a lot of causes that might affect our prices of direct materials. Therefore, of course, for our web company, it could be one of these causes or a mix of different causes. Therefore, we need to investigate in order to know exactly what the cause was. We also have a direct materials efficiency variance by the amount, of course, which is an unfavorable variance, by the amount of $66,000. This means that we used more quantity in our actual production than expected. So what do you think is the reasons for this unfavorable efficiency variance for the direct materials? Come on, you need to think
About the quantity, right?
about the quantity.
Maybe because the quantity is so decreasing, right? So this is
Excellent, excellent. Therefore, we just said that maybe the price or the favorable price variance in direct materials was because the purchase manager purchased a lower quality materials. Therefore, in our production process, we needed to use more materials in order to cover this lower quality, for instance. Therefore, this is or might be one of the reasons. What else?
the manager hired the underskilled workers.
Excellent. Therefore, if the manager, or let us say the human resources manager, has hired a lower, or let us say employees or workers with low skills, therefore they would use up more quantity of materials than should be, or than should be used, or than expected. Therefore, this is another reason.
Maybe some adjustment to the design, maybe more raw material.
Excellent. We changed our manufacturing process. We changed our design of the product. And we did not consider this change in our standard. Therefore, we had a problem in determining our standard. Excellent. What else? Is there any other reasons that you can think of?
Maybe before we are going for a motor size, and when we want to go to like for 5 people or something, we need more raw material per unit.
We introduced, let us say, which is the same point. We changed the design in order to...
The same design, but when we put our budget, we use a motor size, like a 0 size.
Excellent, excellent. Therefore, we had a problem in determining our standard. And because we need to, in determining our standard, we need to consider all the changes within our production process. If I failed to consider all the changes within the economy, within our design, within our manufacturing process, therefore there is a problem in the standard itself. Therefore, in achieving or determining the standard, we need to consider all the changes within the organization. Therefore, we had a problem, the same point, we have a problem in determining our standard. Therefore, as we can see here, the efficiency or the use of direct materials within our manufacturing process has increased than expected because of one of these reasons. And of course, other many reasons, and so on. Now let us move on to the direct manufacturing labor. Of course, we have a direct manufacturing labor price variance or a rate variance, as well as an efficiency variance, both unfavorable. Let us consider the first variance, the direct manufacturing labor price variance by the amount of $18,000, unfavorable, of course. That means that we paid the employees more than expected. So what do you think is the reasons here? We paid them more than expected. The first thing that could be considered is that we did not determine the standard correctly. We had problems in determining our standard. Maybe we determined our standard according to the prices that has been paid for the last 5 years, but we did not consider, for instance, that there is a general increase in the rate that is paid to the workers within the economy. Therefore, I missed this change. Therefore, I did determine the standard that was an incorrect standard. Therefore, we had a problem in determining our standard. What else?
We have this skill that to do the self-efficiency
Therefore, we hired highly skilled workers. But this might contradict with one of the causes that has been, let us say, suggested in the direct materials efficiency variance. It could be. I'm not saying this is wrong, but we need to understand what was the reason in the direct materials efficiency variance. If it is not the workers, therefore you could be right. Therefore, we have a higher price or a higher rate that is paid for the workers because they have more skills than the workers or than expected or than the average level workers. This is one of the reasons. Excellent. What else?
The number of workers of this type of production process are less now.
We increase the number of employees.
Number in the market or in the country, number of workers are less
Has
than
decreased.
before, yes. So they will increase their rate.
Could be, according to their union. And if, for instance, the union of these employees or these workers had, let us say, negotiated a new price within the current year. Therefore, the union would negotiate or would, let us say, force sometimes companies and manufacturers in order to raise the employees or in order to raise the rates that has been paid to the employees and the workers within an organization or within a sector of the economy, and so on. Therefore, this is one or could be one of the reasons. What else? Yes?
They were underpaid because of unemployment and then unemployment increased. So
Excellent. Therefore, the economy, which is also needs to be considered within the standard. Excellent. Therefore, maybe the economy in the previous years was, let us say, or was not performing as well as the current year, for instance. Therefore, in this current year, there were a lot of demand on these employees, a lot of demand on these workers, let us say, because we are saying about, or we are talking about workers that are being paid according to wages, not salaries, and so on. Therefore, maybe the demand on these workers were higher than previous years because the shape of the economy has developed. The shape of the economy has, let us say, been better than previous years. Therefore, if the demand increases, or let us say in order to companies or in order to attain these workers within companies, they raise the prices or they raise the rates that is paid for these employees, and so on. The list goes on and the causes goes on. Therefore, as you can see, if we do not have the information, we have a lot of causes to consider. Therefore, we need to investigate in order to know the real causes for these variances. At last, the last variance is the direct manufacturing labor efficiency variance by the amount of 20,000 unfavorable. Variance, of course, if it is unfavorable, this means that we have used up more hours, more direct labor hours than expected. So what might be the reasons or what might be the causes for this unfavorable efficiency variance for the direct manufacturing labor? So what do you think? Come on, think. You need to think. What could be the reasons?
Maintenance department didn't probably maintain machines.
Excellent.
That's so time they were manufacturing.
Excellent, excellent. We had a problem in our machines. Our machines are not maintained in a good way. They are not repaired or they are not scheduled to be repaired on a periodic schedule, for instance. Therefore, we had problems in our machinery that used up more time than expected. Because, for instance, the workers are working and with let us say, the workers are working within a specific product line, for instance, and when they are working, the machinery shut down, for instance. Why? Because it needs repairs and so on. Therefore, the amount of labor that was used in order to manufacture the 10,000 units was more because we had breakups in our manufacturing process. We had to repair our machinery. We had, for instance, to perform our manufacturing process within a low rate because the machinery could not pick up the pace, and so on. Therefore, maintaining, or one of the causes is maintaining the machinery. We did not maintain the machinery in a good manner. Therefore, this could be a cause, or one of the causes, of having a higher number of number of labor hours than expected. What else?
Maybe more materials. That means more processing. That means we need more hours to complete the stuff.
Excellent, excellent. Therefore, we said that one of the reasons is that we had lower quality products, or let us say lower quality direct materials. Therefore, lower quality direct materials caused us to use up more of these direct materials, which is the cause of the efficiency variance in the direct materials. The using of more materials or direct materials within our manufacturing process could explain the increased number of labor hours that has been used in comparison with the expected number of labor hours. Excellent. What else?
Maybe more time is needed for the process operation that is expected for 2 years. Maybe new workers that need to.
Excellent.
To
get used to the manufacturing process. Excellent.
Yeah,
yes.
or maybe getting easy by talking and chatting.
Excellent, excellent. Could be. Therefore, if we hired a lower skilled employees, as one of the causes we just explained, this could be one of the causes of having or using a higher number or a more number of labor hours than expected, because the underskilled workers would need more hours in order to get used to the manufacturing process. Therefore, this could be one of the reasons. Therefore, as we can see here, from our variance analysis, our variance analysis gives us more questions than answers. Correct? As we just saw, analyzing one of these variances could have 10, 20, 25 reasons. Only one of these variances. Therefore, if we had 2 variances for the direct materials, 2 variances for the direct manufacturing labor, and then, as we are going to see, 2 variances to the variable manufacturing overhead in chapter number 8, inshallah, we are going to see the analysis of the variable manufacturing and the fixed manufacturing overhead expenses. And if we have also 2 different variances for the fixed manufacturing overhead, and so on. Therefore, we will have a lot of questions because of these variances. Therefore, as we can see here, the main objective of the variance analysis is to direct us onto the right track. This is the main objective or the main goal of any variance analysis. Now, after calculating, as we said, the variance analysis is concerned with 2 things. First of all, the calculation of the variances, which we did according to our analysis for Web Company. Now we need to investigate these variances. We need to understand what are the causes of these variances. Of course, why do we need to know the causes of these variances? In order to have corrective actions, in order to have controlling decisions. Because one of the main reasons of variance analysis, as we said in the first lecture in this topic, that one of the objectives, one of the goals of this analysis is to make controlling decisions in order to make corrective steps. For instance, if the cause of the direct materials efficiency variance is because of the lower quality, for instance, lower quality of the materials, therefore, I could go to the purchasing manager and I would say to him, do not purchase lower quality. We need to have the same quality that we have been purchasing. Therefore, this would be corrected in time in order not to have a lot of problems in the future. Therefore, as we can see here, the first point that we need to consider that these variances need or in need for investigation. We need to consider what are the real causes of these different variances within this organization. This is point number one. Point number two, from our analysis and interpretation of these variances, as you could see, that each variance could be related to the other, correct? We said one of the causes of direct materials price variance is the lower quality, or let us say the purchasing manager switched to a lower quality direct materials or raw materials. Therefore, or hence, the favorable price variance for the direct materials, because of course the lower quality direct materials or raw materials would cost less than the higher quality raw materials. Therefore, he could have obtained a lower price, therefore, or hence the favorable price variance by the amount of 44,400. But this lower quality of materials could cause the manufacturing process to use up more materials, more direct materials, more raw materials. Therefore, or hence, the unfavorable efficiency variance within the direct materials. Therefore, as we can see here, one cause has effect, or one variance has affected the other. On the same note, if we had, and as we said, if we had lower quality raw materials, this could be, or this could take the labor or the workers more time in order, for instance, to produce a product, or to, let us say, use up the materials within the manufacturing process, because these materials has lower quality, therefore we need to use more materials, therefore we need to use more hours, or we need to use up more hours in order to produce the same number of units. Therefore, as we can see here, all the variances are interrelated. There are relations between these variances, and we need to consider and we need to be cautious of these relations between the different variances. Any questions? This would be point number two in our variance analysis or interpretation. Point number three. When do you think we need to consider a variance? Do we need to consider only unfavorable variances, or only favorable variances, or favorable and unfavorable variances? What do you think? Why both? According to our definition of favorable and unfavorable variances, favorable variances has the effect of increasing net income. Therefore, it is a good thing for our organization. While as unfavorable variances has the effect, or the variances that has the effect of decreasing our net operating income or net income. Therefore, any manager maybe would say that I will only focus upon the unfavorable and will not focus on the favorable. What do you think? You said both. Why? Yes.
The unfavorable make a problem for the company, as we know. Sometimes the favorable changes may cause a problem or unfavorable to the other variance.
Excellent.
Like a price variances increase, but this material decrease.
Excellent, excellent, excellent. Therefore, as we just said, that we have relations between these different variances. Therefore, they are interrelated. This interrelations between variances should be considered because a favorable variance might have an unfavorable effect on other variances. Therefore, we need to consider all variances, whether it is favorable or unfavorable. As we just said, that the favorable price variance was maybe because of the decrease in quality of the raw materials. The decrease in the quality of raw materials has affected an unfavorable efficiency variance in direct materials and also an unfavorable labor efficiency or direct labor efficiency variance. Therefore, as we can see here, we need to consider all variances, whether favorable or unfavorable. We need to consider the variances by interpreting these variances and knowing the exact causes of these variances. Another question: do we need to consider all unfavorable and favorable variances regardless of the amount? So what do you think?
It's immaterial. If we do the cost benefit analysis, it's immaterial and tracking it or doing it is more costly.
Excellent. Excellent.
The correction of it.
Excellent, excellent. Therefore, according to our variance analysis, we said we could perform our variance analysis by the comparison between two things, correct? The comparison between the standard or the budgeted, let us say, and the actual. And we all know, and as we just discussed in the beginning of this chapter, that budgets are prepared according to the expected. And no one can expect the future 100% correctly. Therefore, we all know that the budget would have a margin of error, that would have some sort of a percentage that would go or that would be wrong. Therefore, in our variance analysis, we need to consider this fact. We need to consider that in our variance analysis, we need only to focus upon the variances that are larger than this margin of error. For instance, we could say that any variance that is larger than $2,000, for instance, would be investigated. And any variance less than $2,000 would not be investigated. Therefore, according to our budget, we had the expectation, or we had the determination, or we determined the margin of error to be this $2,000. That means that our budget might be more or less than the actual by this $2,000. Therefore, if we had a variance within this margin of error, I would not investigate it. I would not focus upon it. I would not consider it. But if the variance is more than our margin of error, therefore, this variance could have a real cause. Therefore, we need to focus upon this variance and interpret this variance.
And any variance that is for a reason that is out of control, out of our control, we don't think to bother ourselves to solve it or correct it because we don't have control over it. Like the labor, the labor rate, maybe it decreased by
An excellent point, an excellent point. But we need to investigate this variance in order to know whether it is within the control of the management or not within the control of the management.
the result is out of our control.
How I'm going to know?
I'm going to the market. I'm doing exactly what's wrong.
After the interpretation. Therefore, I need to interpret this variance in order to consider, or in order to know, or in order to acknowledge whether this variance was within the control of the management or out of the control of the management. Correct? Therefore, we need to consider and investigate all variances within the organization that is more than a specific line or a specific margin, let us say. As we said, if it is greater, or the variance is greater than $2,000, I'm going to investigate. After this investigation, if, for instance, the cause was out of the control of the management, therefore, there's no harm, because we could not have done anything to prevent this variance. But if it is within the control within the control of the management, therefore we need to have corrective actions in order to correct the situation in relation to our variance that has been investigated. Any questions? Therefore, all unfavorable and unfavorable variances should be investigated, and of course, the investigation should only consider the variances that are larger than a specific amount or a specific percentage according to the policy of the organization. Any questions? Therefore, now, let us discuss our last point, point number 4. We said in the beginning of this chapter that the variance analysis has more than one goal or objective. One of these objectives is the measurement of performance or performance measurement. The other, of course, as we just said, is making corrective actions, therefore the learning or the organizational learning. Therefore, in our variance analysis, we need to consider both of these objectives. And we do not need, or we should not focus upon the performance measurement, for instance, of the managers, of the different managers within the organization, and forget about the next or the second objective of organizational learning. Yes, we could use the variance analysis in the performance manager, in our performance measurement, or in measuring the performance of different managers. For instance, if I'm looking on this summarization of variances and I see that we have a price variance by the amount of 44,400, which is a favorable price variance, therefore, I could say that this variance or favorable variance is a good, or it means a good performance by the purchasing manager, because the purchasing manager would have an efficient negotiation or a successful negotiation with the suppliers, or he was able to locate a suppliers or a supplier, let us say, that gave us a lower price on our direct materials. This could be the case. Therefore, in order to evaluate the performance of the managers, we could use the variances. But we need not to focus upon the variances by themselves. Because if the focus is upon the variances, managers would focus their attentions on achieving these performance measures while ignoring the objectives of the organization. For instance, if we have an objective by the organization to to have or to produce a high quality product. And in this organization, the performance measurement focuses upon only the variance analysis. That means if we had a favorable variance analysis, this manager would be rewarded, and if it is an unfavorable variance, this manager would be reprimanded. If this is the situation, all managers will focus their attention on achieving the performance measures, on achieving favorable variances, but without considering the quality, which is the objective of this organization, which is the producing of high quality products. For instance, the purchasing manager would purchase a lower quality direct materials or raw materials. Why? Because he wants to have a price or a favorable price variance. For instance, the human resources manager would hire a lower skilled or underskilled employees and workers. Why? In order to achieve a rate or a favorable rate variance in the direct manufacturing labor. Therefore, as we can see, these situations or these decisions would indeed achieve a favorable variance, but on the other hand, it would affect the company in the long run. It would affect the quality of the products. Therefore, it would affect the amount of sales or the amount of units sold to the customers, which would, of course, or definitely change or affect in a negative way our net operating profit. Yes, by focusing upon variance analysis, we could be successful in a year or 2 years. But if we continue in the same situation, if we are continuing within the same course of action, focusing upon the variances and not focusing upon learning from our variances, therefore managers would be pressured onto focusing upon these performance measures, and therefore they would ignore the main objectives of any organization. Therefore, in our variance analysis, in our interpretation, yes, we could use the variance analysis in our performance measurement, but also we need to consider that this variance analysis is not only for the performance of measurement or measurement of performance, but also is because, one of the objectives is to learn from these variances, is to make corrective actions of these variances. For instance, if we find out that the number of materials, or let us say the amount of materials that is being used within the process is higher than expected, we might take a corrective action. We might learn from this information that we have a problem in our manufacturing process, or we might have a problem in our designing process, and so on. Therefore, we need to understand that any variance needs to be considered, needs to be evaluated from two objectives, which is the performance of evaluation or evaluation of performance, and the learning or the organizational learning, or having corrective actions or having controlling decisions. Any questions? By this we have finished for today. Inshallah, the next time we are going to start by solving some of the problems at the end of the chapter. We are going to start with problem 730. So please prepare this question for the next time. Of course, the next time also we are going to continue with our discussion. The last point that we need to discuss, the last point that we need to discuss is the journalizing of these variances. and something called standard costing. Therefore, please prepare the journal entries and prepare the term normal costing and prepare the term actual costing that we took in Cost Accounting 1, because we are going to build upon these terms in the next lecture. Thank you for listening, and I'm going to see you inshallah the next time.